Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a great day, taking a look here at XRP, seeing what's going on. I get a lot of requests for this, so we can go ahead and try to cover it more frequently. We are blasted, or have blasted straight through that resistance range. Didn't really hold all that strong. We saw some initial resistance here last couple of days, that 125 mark, but it has since destroyed that. Now, granted, today's candlestick hasn't closed yet, and this coin's very notorious about shooting up and then dropping off like a cliff. So we've got to recognize there's a lot of factors involved here, and it's important to watch your trades closely if you're going to be trading this coin. All right, simple as that. Spot bags, different stories altogether. Feel free to continue adding to your spot. This does look like it wants to continue to run, but on the same accord, we don't want to just be, arbitrarily jumping into trades here at this point. So careful. Let's go ahead and look at some back-end liquidation data first and kind of see where we're at there. And while we're letting this load, I want to say thanks again to any community that's been watching and liking the videos, commenting below. Deeply appreciate it. It's really super awesome to be able to work with great people day in and day out. So I'm thankful for you. So do appreciate you. Once again, hitting the like button and or commenting below. Love to hear from you too. So what we want to look at here with liquidation is a couple of things. First of all, is there any concentration, heavy concentrations above or below the price? This just kind of tells us where the whales are more likely or incentivized to push the price action, because some people are shorting really heavy or taking really heavy longs. More important, they're usually the high leverage ones. So if we look here, we can kind of see there's a pretty big number there. Somewhere in the range about 150. And it makes sense. It's just above the most recent high. So again, a lot of times you'll see recent highs or recent lows get that little extra candle wick above or below just to destroy the price action and to turn it right back around. So just know that's probably a good incentive there. We also can see some nice higher highs here also. So we'll double check a few things here to confirm, but it does look like we're on the way up here, more likely to retest that level. We do take a look here at the last 12 hours. We can see pretty heavy concentrations above the price action. The next lowest point is just below the lowest point, which we saw 135. So 135 is that lower level, 150 plus is that upper level, okay? So it does seem likely that 150 will be hit. And to touch on the daily time frame while we're here, these are MacroFIB levels pulled up from the highest point to the lowest point as far as a descending type of trend is concerned. We've already taken, swept that 0.68 fib level. There's a good chance we'll see some consolidation there if it pulls back. But the key takeaway here is that 161 roughly is that next area of retracement. So if the price continues to run, we may see some initial resistance at that level. Again, folks, fib levels they're strictly hypothetical. They're more of a forecasting tool, kind of letting you know that this is like popular areas of retracement. It doesn't mean anything in the big picture, really. So truthfully, that number I just told you, while it could happen, there's a slightly larger probability that we'll see some resistance there. It doesn't mean too much. Just again, to kind of take it with a grain of salt. Okay, so that goes for if you're like a Elliott wave enthusiast, for example, you watch others that use that. Well, keep in mind those are like shooting in the blind traders, and they're absolutely looking for for key levels, and it's important to recognize that. But unless you're identifying supports and resistances and overextensions, etc., you're kind of doing yourself a disservice. Not by any stretch is what I'm doing here perfect. There's no doubt about it. But again, on average, we're about 80% with our trades here as a community, so there's that, right? Again, I miss a lot of opportunities though too. So I'm always going to tell you to not take a trade versus taking a higher risk trade. That's just the way it goes. Anyways, XRP, is this a high risk situation? Short answer is yes, but you're also going to be finding more likelihood of further upside based on the overall continuation. Here's the main thing I think you want, if you're going to take this away from anything. Look at volume when you trade, because that's probably the biggest indicator that people seem to overlook. And again, it's a foundation of what I like to utilize, both with local points of control, which is based on volume accumulation, but also this here. We're above the moving average. As long as we continue to maintain that, we're going to be in pretty good shape. You can see here a couple days where the price action got a little bit low, and that was just kind of this period of consolidation right before it broke out with this ascending type of trend. So again, there were some higher lows and higher highs going into that, so there was no reason to short, but all I'm getting at is volume. Follow the volume, folks. You'll know that that's going to provide you with a lot of benefit. Either way, from a daily time frame here, there's no reason to short this coin. You probably won't. You'll probably hear me say that for the next week or two, maybe even more, because the daily time frame is going to be super bullish for a while, just based on how strong the coin is. I mean, 10 days ago we were 170% lower than we are now, or we've seen that much growth over the last 10 days roughly. So awesome stuff. Congrats to those who have been holding on to XRP for probably months and or years. You're probably finally at break even or finally above, with the exception of a few that bought the top around 180, 190. Anyways, moving averages are good here, folks. We're above all 4 moving averages. That's always positive. 4-hour time frame is going to reflect too that we're over 70 on the RSI. When you're over 70 here, that implies you do not want to close your long position. You do not want to short into this. This is just kind of a very strong indication letting us know that even if the price pulls back by a little bit or even a lot, we're still in a position where securing profits, it's still premature and too early to do so, all right? That's generally the consensus there. Let's take a look at TD sequential. You can see we're at a 7 here. So the truth is we're probably about 8 hours from retracement, or we could even see further retracement. But the key takeaway here is that when you see a 7 on TD sequential, it kind of just lets us know we've been running for, it's a good solid amount of time, but it's not enough to warrant a pullback yet, right? So the situation here is that we can expect the price pullback a little bit, but maybe not so much here. And the thing that you want to recognize too, and I've got these red lines on the chart, those are previous daily candlestick closures from a few months back. So those are going to be some good support levels here for us. We also got this 0.618, 0.65 fib level between 130 and 138. So honestly, the range of 122 to 138 is a pretty solid support range. That in combination with the fact that we had this little resistance here and we broke through it. So if we do come back down to retest, we can presume that'll be the next low. Okay, so that's generally how that's supposed to work. So just heads up, future reference, 122 to 138 is that good solid support range for us. I know it's a big range, but it's hard to get specific when you have such volatility like this and such big movements. So please recognize that. Ichimoku Cloud, going to confirm that you do not want to short this coin and that you are in a good position if you want to consider keeping a long position open. Okay. More potential for further upside, especially with this pattern we have here. We're retesting that same level and we're consistently moving up here. So if you see this, when the price action keeps retesting the same spot, but the lower highs are getting closer, the likelihood of further breakout or breakup is higher. Okay. So again, statistically, you're going to find more success taking a long than a short right now at this point. That's just kind of what the charts are telling us. So that's kind of where we're at there. If the price pulls back, I would say a solid consideration for longs or just dollar cost averaging is 138, 132, and 122. Those are good, 3 good areas there for you. I'll post our playout chart here on our Twitter, Telegram, and Discord shortly. If you're not familiar, it looks a little something like this, where I kind of post, updates on the videos that I cover. And it's a lot of fun. So check it out. Last but not least, too, we have a progressive prize pool here with Bitunix this month. They're going to have more available options moving forward, so just use my link to register so you're always eligible for those. And what this does basically, we have $60,000 to give away between the top 20 traders, and even just say top 10 to 20 get $1,200. It's not too bad. So it's pretty simple to qualify. You really just trade with the exchange, no KYC or VPN. They're awesome. I highly recommend them. Check them out. Anyways, have a good rest of your day, folks. We'll see you next one. Take care.